Interest rates have skyrocketed and most people are losing money on their house every single month. If you are an investor looking to invest your money but not sure when it's the right time, we've helped hundreds of investors buy properties and make money on them. And we found that the biggest common denominator is not having the right market, but the right mindset. In this video, we're going to talk about short-term rental properties versus long-term rental properties. There's a huge demand for short-term rentals, and as we can see in this article from Newswire, the demand for short-term rentals has increased along with the average nightly rate. Where is this demand coming from? I'm glad you asked. It's the pent-up demand from the COVID lockdowns, the economy opening up again. While the demand for short-term rentals is there, is it a viable option? Let's take a look. Short-term rental. The first pro point, high profit potential. If you set the right rates at the right time, it can be very lucrative. But just like any business, there are on and off seasons, and pricing your unit correctly will keep it consistently occupied. On the flip side, the con is that your income may fluctuate. In a slow season, even after adjusting your rates, your income isn't guaranteed. Long-term rental, the first pro point, consistent and predictable returns. The traditional market has seen major growth, and with a little bit of preparation, you can rent your unit quickly with almost no vacancy in some areas. On the flip side, the con would be that there are lower profits. You know what they say, if you go with a safer investment, the profits are lower. In many cases, on a monthly basis, investors have had to pay out of pocket every month to carry the property in the Greater Toronto area. Short-term rental, second pro point. You can stay when you want and rent when you don't. You can actually block off your calendar when you plan to stay at the property and rent out the home on the other days. A con on the flip side would be that you may not be able to align your schedule with the property, especially on the on and off season. If your property isn't generating income consistently, staying at the property may just increase your expenses and may not be a viable option. Long-term rental, second pro point, less management. Once you find the right tenant, you're all set for at least a year. You will rarely hear from your tenant unless you pick the wrong one. On the flip side, the con would be that once you find your tenant, your property becomes off limit for personal use. The only time you are allowed to visit the property is for maintenance and repairs. Short-term rental, second pro point, less wear and tear. The major upside to short-term rentals is there are very little damages and maintenance concerns because the guests stay for a very short time. On the flip side, the con would be there are many responsibilities, managing cleaners, stocking all the items, reporting to Airbnb or other platforms, and responding to guests in a timely manner to ensure a short turnaround time. Long-term rental, third pro point, no need to furnish. Tenants bring their own furniture in the property, so there are no upfront costs on the homeowner. On the flip side, a con would be that when the tenants do move into the property with their furniture, there's naturally going to be some wear and tear, especially when they move in and out or stay for a long time frame. You're likely going to have to do a new paint job and fix a few things here and there. And there you have it. This is your breakdown of short-term versus long-term rentals. There is no right or wrong, good or bad. It's just what makes sense for you. If you have a property in a high demand area for short-term rentals and you have some time to manage it, the income is like another person working for you. If you have too much on your plate, don't have the capital to invest in furniture, or your property isn't located in a high demand area for short-term rentals, traditional rents have also increased drastically over the years. The bottom line is, don't let your money generate low returns for you in the bank or mutual funds, or even in an underperforming property. Think about your strategy. With today's prices, you can still generate double-digit returns with short-term or long-term rentals. Not sure where to invest or when to pull the trigger? Click on the link below and I will walk you through the process step by step so you can be on your way to purchase your next property. Also, what do you think? Comment below which option makes more sense. Until next time, we provide results that move you.